Acquiring an established business can be a smart move, and buying an LLC is no exception. But how exactly do you go about purchasing someone else's limited liability company? Let's break down the key steps and considerations. First, let's quickly recap what an LLC is. A limited liability company is a business structure that combines the pass-through taxation of a partnership or sole proprietorship with the limited liability of a corporation. This makes it an attractive option for many entrepreneurs. Now, onto the process of buying an LLC. The first step is to conduct thorough due diligence. This involves examining the company's financial records, contracts, assets, and liabilities. You'll want to review tax returns, bank statements, and any outstanding debts or legal issues. It's crucial to get a clear picture of the company's financial health and potential risks. Next, you'll need to negotiate the terms of the sale with the current owner. This includes agreeing on a purchase price, which should be based on the company's value and potential for growth. You may want to consider hiring a business valuation expert to help determine a fair price. Once you've agreed on the terms, it's time to draft and sign a purchase agreement. This legal document outlines the details of the sale, including the price, assets included, and any conditions or warranties. It's highly recommended to work with an attorney experienced in business acquisitions to ensure all necessary details are covered. After signing the agreement, you'll need to transfer ownership of the LLC. This typically involves filing paperwork with the state where the LLC is registered. The specific requirements vary by state, but generally include updating the LLC's articles of organization and operating agreement to reflect the new ownership. It's important to note that buying an LLC doesn't automatically transfer all contracts and licenses. You may need to obtain new licenses or permits, and you'll want to inform clients, vendors, and other stakeholders about the change in ownership. One key consideration when buying an LLC is the tax implications. While LLCs offer pass-through taxation, the purchase itself may have tax consequences for both the buyer and seller. It's advisable to consult with a tax professional to understand and plan for these implications. Another important factor to consider is the LLC's existing employees. If you plan to retain the staff, you'll need to address any concerns they may have and ensure a smooth transition of employment agreements and benefits. Lastly, don't forget about the LLC's brand and reputation. Consider how the change in ownership might affect the company's standing with customers and in the market. You may need to develop a strategy to maintain or improve the LLC's reputation under new ownership. In summary, buying an LLC involves thorough due diligence, negotiation, legal documentation, ownership transfer, and careful consideration of various factors including taxes, employees, and brand reputation. While the process can be complex, acquiring an established LLC can provide a solid foundation for your business endeavors. Just remember to seek professional advice from lawyers, accountants, and business advisors to ensure a smooth and successful transaction.